But let's move on now back to the markets, talk about individual stocks. Sunny Agarwal from SBI Securities is now with us on the show. Sunny, morning, and thank you very much for joining in. What have you picked up from your circles about this recent volatility, this range-bound trade? Is it just election jitters? And what happens after we get the verdict? How do you expect the markets to move?
Good afternoon, and thanks for having me on the show. Definitely, I think a big event ahead of us, and as we speak about market, I think it has been a range-bound trading, what we have seen during the last 2 to 3 months. So 21,700, 800 on a downside, and 22,700, 800 on the upside. So I think 1,000-point band where we are seeing a nifty trading. Nervous ahead of the big verdict, obviously. Let's see. I think the market is entering with a narrative that the current government policies and the current ruling party will continue. And to that extent, the earning growth trajectory, which we have seen a robust earning growth trajectory post-COVID, that will at least continue in the mid-teen for FY25 and 26. So I think we are hopeful, cautiously optimistic. Having said that, I think there are many sector-specific opportunities which exist in the market as far as the wealth creation is concerned from a medium to long-term perspective. Case in point, railway wagon is the one theme which we like. I think all the three major players, whether it is Titagarh Rail, Texmaco, Jupiter Wagon, sitting on a robust order book. At the same time, there is a strong tailwind from Government of India, wherein during the recent budget document also we have seen that government is giving push to increase the share of railway freight from current 26% to close to 45% by 2030. And to support that, I think many new dedicated freight corridors have also been launched. So I believe that ultimately the wagon as a subsector is which a wagon manufacturer will be the key beneficiary out of that. And all the three players, Titagarh, Texmaco and Jupiter, are sitting on a very robust order book. We expect the execution to pick up during next 2 to 3 years, and hence the numbers will catch up over there. Although at a current juncture, valuation may look pricey. But going forward, what I feel is that as execution pick up, at the same time as the new tenders are rolled out, we will see order book will also jump. So this is the one theme which we like. Another macro theme which we like is about the metal products. So all the metal pipe companies, whether which are supplying to industries like water, oil and gas, solar, high-speed rail. I think these are the few sub-sectors where metal product companies will benefit out of that. Case in point, all the ERW pipe companies are sitting on a robust order book on the back of order from Jal Jeevan Mission, solar torque tube, that's another big emerging sector, infrastructure. At the same time, we are seeing to cater to this increased demand, there is an capacity expansion which all the key major players have taken, whether it is APL, Apollo Tube. They are expanding capacity from 3.8 million ton to 5 million ton. JTL 0.6 million ton to 2 million ton in next 2 to 3 years. High-tech pipe 0.7 to 1. Good luck from 0.3 to 0.45. Jindal Saw again, which is into LSAW, sitting on $1.5 billion order book. I think the entire metal product, whether it is in pipe or for that matter, wire rope companies like Usha Martin, which are again sitting on a very decent order book as well as capacity. I think the entire these metal product companies are in sweet spot and likely to deliver a healthy earning growth over the next 2 to 3 years.
Okay, so metals and some of the related companies, wire companies perhaps as well. By the way, I'm looking at some moves building up again. Just allow us 1 minute, Sunny. Look at ABB India on the move again, 3.5%. Look at Hitachi Energy, again about 9.5%. GE T&D up again 5%. So this mega capital goods move, that's back on, and that's really been the story of the week. A lot of these stocks doing well. Honeywell, of course, we discussed with Sudarshan just a while back. It's also up about 4%. So yeah, industrials and capital goods stocks really ruling the roost. ABB India this week is up about 16 to 17%. What do you think of this sector, Sunny? I mean, we've had some pretty strong earnings. At least Q4 has been good for many of the operators. What's your take, and would you recommend any stocks on the buy side now?
Yeah, definitely. I think a very robust set of numbers from all these MNC companies, whether it is ABB or that for that matter, Siemens India. I think one of the subsector which we like within this category is the bearing companies like SKF, Schaeffler India. So we have seen again a very robust set of numbers from SKF as well as Schaeffler India. And I feel that ultimately the key beneficiary of the industrialization in India will be all these bearing companies, whether it is on automobile side or industry side. So SKF and Schaeffler is our top pick. One of the small company on engineering side, that is Praj Industries, is also on our radar. So of late we have seen that there was a ban on direct conversion of sugarcane juice to ethanol, and that has led to some apprehension that whether Praj Industries will able to get additional order for this distillery segment. I think post-election this decision will be unwound, and I think Praj is trading at a risk reward seems to be very reasonable as far as Praj Industries is concerned. So bearing and small engineering companies like Praj will be our top pick from this sector.
You also like capital market plays, Nuvama, BSC, IFL Securities, Angel Broking. These are some of the stocks that you recommend in your portfolio. You know, the view is that, you know, the long-term story is very much intact. But these stocks have already front run and given, you know, the returns that, you know, for the next few years. The multi-bagger stage may be over, and from here on they'll do well, but not the kind of returns that they've already given in the past. Is it safe to enter any of these stocks at current levels for someone who's not participated?
Yeah, I think you are right that the first leg of re-rating has already been done as far as all these capital market stories are concerned. But I think the runway is pretty long right now in terms of even demat account penetration. We are close to 15 crore demat account right now. Even on wealth management side, I think the opportunity to tap the pull on ultra HNI and HNI categories humongous. So I think there is still a long runway in terms of growth as far as this entire capital market story is concerned. And one of the stock which we like over here is the BSC, Bombay Stock Exchange. The reason being that I think yesterday only they have completed first year of relaunch of future and option product. And right now they are sitting on close to 7 to 8% market share. And going forward, I think there are many multiple levers which are available for earning growth. A case in point, launch of new products, shifting of expiry from last Thursday to mid Thursday for stock specific expiry. So I think multiple levers are available. I agree that the story from here henceforth will be kind of 20% plus CAGR rather than looking at a multi-bagger return from all these capital market growth stories.
Okay, all right, Sunny, we'll leave it on that note. Thank you very much for joining in and taking us through some of the specific stock calls. Well.